So this is where we left off Friday. This is going to be a little bit hard to see. Maybe I could blow it up. And it's going to be blurry, but you get the gist of it. These were the ranges I was looking for it to find resistance support. This is the last candle of Friday of last week. Monday was a trading holiday, so we had 4 days trading. And this is my 11% move that I'm expecting if it breaks this head and shoulders here. Shoulder, head, shoulder. We've talked about that. And last week I pointed out that we were playing out to the downside of the head and shoulder. I sent a screen cap out just so people could see it. But we had dipped below this box right here. So, and this is basically how we wound up. Close this. Thursday's open after it started selling off on Wednesday. Tuesday and Wednesday both were sell-off days. We opened right at the low level of this box, went down to about 41.14, and then took off to the upside, clearing this box. So we got to hold this level next week, 43.65. We need to break this downtrend here. Otherwise, we'll get back into this range. Potential sellers show up because we've already been here before, and then we head lower. So we got 5% of our 11% before it turned around. If we get into this range again, there's no reason for me to think that it's not going to finish off the pattern to get the 11%, taking us down to 38.75, 38.50. Could spike this like it did here, get all the way down to 3800. Who knows? Depends on the sentiment of the market. If things start to go south for Ukraine and Russia gets a handle on things, who's to say it's just not going to continue to sell off? The defense stocks did great last week, but basically everything did. If you catch this bottom and you start buying here, especially since it opened up into this range, you would have made plenty of money last week. So we'll keep these boxes in place and see how it plays out. If it holds 43.60 first part of next week, I'll look for it to try to close above 44.50. Again, that's our 10-month moving average. It will have regained that all-important level. If it closes above this next week on Friday, that's very bullish. If it closes below it on Friday, that's not so bullish. So we'll see how it plays out. Again, the head and shoulders is still into play if we get below 4,300. And then that brings in this 11% back on the table. If we move to the weekly candle, this formation here, last week's candle, this is the entire week. It's called a hammer, and they tend to be bottoms. It could be a fake out, but if you look here, this was a bottom. Just like this hammer here was almost a top. So this is a pretty powerful candlestick when you're looking for the bottom. when you see a close like that, in other words, it opens up, it flushes down only to be rebounded back on higher volume, then that could be an indication that we've bottomed and will move higher. We'll just have to wait and see how that plays out. Do we get a continuation green candle next week? That's important. When you see this hammer, you have to have continuation, or does it continue to sell off? Was it a fake out? So Monday is the last day of the month. Here's our 10-month moving average at 44.50. I gotta say, if the market's going to be bullish, it's got to get above that 10-month moving average by close on Monday, and certainly by closing on Friday for the weekly candle. That would, if it closes by Friday above 44.50, that's our continuation move. So your range could be limited next week between 43.64. I'll go ahead and put a orange candle there, or an orange candle, a green line here. This could be our range right here, 43.60 to 44.50. Because if it gets below that, it's going to sell off. If it gets above that, it's going to probably bleed up. It's probably going to melt up. So they very well could keep it right between these levels.